Hello everyone, welcome to the first business day of the month. My name is Paul Adey. I'm here with Dr. Ernie Goss. Dr. Goss, we're going to jump right into the San Joaquin Valley Economic Indicators results for the month of August.
Well, they were, for the four-county area, that's the four-county metropolitan area. Fresno, of course, is the center of that. And I'm reporting for the Craig School of Business here. I'm a research faculty member there at the Craig School of Business. You know, Paul, it was the 12th straight month the index has been above growth neutral, and that's really good. The economy, I'll call it the Goldilocks economy. Not too hot, not too cold, just about right. The index was, it fell. Now, the index did fall, but 58.9, which is a good, strong reading. Anything, the index ranges between 0 and 100, as you know, and anything above 50 is growth positive, 50 is growth neutral. So 58.9 from July's 63.2. So that was a good reading. Then we had, but that's a good indicator of what's going to come in the weeks and months ahead.
Yeah, that's a great point. As far as the overall index for this month, the news topic that we have to talk about is the flooding in Texas and the impact that that's going to have on the economy.
You know, it's not going to show up right away, of course. This Friday, well, actually today, later on today, we'll get the employment numbers, and they took the survey before Hurricane Harvey, so we won't see it. But we're going to see it next month. We'll see it in the employment numbers. And then, believe it or not, later on when the rebuilding, it's such a significant rebuild that's going to go on, we'll see that actually boost GDP in the sense of rebuilding. But it's right now it's lowering confidence. I think it's hurting business confidence. But overall, confidence remains very high, even with Hurricane Harvey. So
it'll be really interesting to see how impactful that is. So the next logical question is talk about confidence in the economy, consumer confidence, and every aspect of it.
Well, for the San Joaquin Valley, strong, continues to be very strong. Even the inflation is moving along. Index is showing modest inflationary pressures. So like I said, it's a Goldilocks economy. Not too much inflationary pressures. The economy is gaining. We're seeing employment. We're seeing all these positive features for the economy. Very few negatives coming out. I guess there were a few negatives that we can talk about momentarily, but it was all fairly positive, fairly right down the middle, I'd say.
Dr. Goss, I love the Goldilocks reference, and I got to know, how do you prefer your porridge?
Well, I'd like it a little warmer, but it's not. That's not bad.
Your economic porridge or your personal porridge?
It's all. We like everything sort of a little warmer than what we're seeing now.
All right, fantastic. Moving on into the index. What about warning signs? I mean, we talked, about the impact of the hurricane, but what else is there?
Well, certainly. I mean, we've got warning signs. Would be the debt ceiling talks are coming up, and that's a big concern in Washington, and that's got to be settled before the end of September. We've got to have that done and over. They're raising the debt ceiling. We're running out of the ability to borrow and spend, so that's going to be a real warning factor. The federal budget impasse. We got to have a budget passed for the next fiscal year. That's very important.
And when's the deadline for that?
That would be we have to have that done in the months ahead. So we got to see that done. And of course, the president has indicated he won't pass a budget unless it includes something for the wall, spending on the wall between, of course, Mexico and the U.S.
Right.
And that doesn't look like it's going to happen. So there's a real impasse there. That would have some real significant and negative impacts on the economy. I think it needs to get done. I think I'm more positive.
A couple of big potential game-changing situations coming up in terms of how the government responds and
that's
the
right.
effect on the economy.
And also there's, as always, we economists tend to watch the Federal Reserve, and the Federal Reserve meets again this month, and what they're going to announce, I think they're going to announce that they're going to begin selling bonds. They have a $4.5 trillion of U.S. Treasury bonds. Well, Treasury bonds and mortgage-backed securities, but together they're going to begin selling those. That'll tend to raise long-term interest rates. So that's another big issue. And now, if they said we're going to be very aggressive, they're not going to. But they'll announce a modest program, maybe $50 billion to $60 billion a month. So that's modest.
Well, so overall, August, pretty much growth neutral, but tending a little bit positive. And is that a fair way to say it?
It is. It is. Again, the inflation gauge was a bit above 70, down a bit from last month. That's very positive. And what we have to watch for coming out is later on this morning is the wage growth that'll come from the U.S. Bureau of Labor Statistics. If that's above 2.5% year over year, I'm getting a little concerned. Then the Fed would begin raising rates, Federal Reserve raising rates, not in September, but maybe certainly before the end of the year. That's a real thing to keep an eye on. The CPI, the Consumer Price Index, keep an eye on that one. That comes out September the 14th, also from the Bureau of Labor Statistics. And finally, keep an eye on the 10-year Treasury. The 10-year Treasury, the yield has been coming down, which is strange for all of us. That just indicates that inflation, it looks like inflationary pressures are coming down, as in our survey, but also maybe a higher level of risk. So investors are fleeing and going and buying these bonds, driving the price up and the risk down. That's what we saw after Brexit, and we're seeing that right now.
Well, there you have it for August, Dr. Goss. Solid month.
Good month, Goldilocks economy. Until we meet again, first business day of October, and may your economic cup runneth over.
Cheers.